Greetings everyone, Joseph James here from theschooloftrade.com, and in this 5-part video series we're going to be talking about a very important aspect, which is our trade management. Now, as you guys know, how we manage our trades can oftentimes be more important than how we get into the trades to begin with. So of course, a very important part, this 5-video series. Before we talk about trade management though, let's recap where we left off on our previous video series. Now, the last video series was called the 3 steps to our trading success, where we had identifying important levels, support and resistance, and looking for patterns. We then used those levels and patterns along with our entry rules to identify them as being the highest probability of success. And then we of course look for confirmation of the move to give us the confidence to enter the trade. So in the previous series, we talked about how to locate the levels, how to look for patterns, how to use our rules, and then how to confirm the move. Well, of course, now when it comes to trade management, right, very important now, because now that you're in the trade, we have to know how to manage it. Now, in this series, this is a 5-part series, and this series will teach you guys how to, of course, identify the 3 main phases of the move. Every market is unique. We all know that. But inside of that unique market are very common, consistent, and dependable building blocks of each move, and we call those the 3 main phases of the move. So we'll talk about the 3 phases. We'll talk about the emotions behind trade management. As you guys can imagine, emotions are a deadly killer no matter whether you're using it to get into trade or to manage the trade. So we'll talk about emotions and how emotions play into your daily routine as being a day trader for managing your trades. We'll talk about how we can use a very simple method to manage our trades. We'll go over, of course, in the 3rd video of this series, how to actually use our method to manage the trades. In the 4th video, we'll talk about the 2 different types of trade management, discretionary and mechanical, right? So either you make the call or you simply follow a set of rules, discretionary versus mechanical. And then, of course, we'll finish up the series by looking at how to adjust your trade management for different types of traders. Maybe, of course, you're trading in a slower time frame, you're trading different markets, right? How do you adjust different types of traders? How do they adjust their trade management to suit their needs? Well, of course, let's start with the first video this week, and of course, that video regarding the 3 phases of the move. Now, it's important, guys, that we know how and why the markets move, right? How and why do the markets actually move? Well, we all know each market has its own unique personality, right? The S&P moves differently than the Euro. The Euro moves differently than the DAX. Well, even though these very unique markets, they all look different, they all have the same building blocks that make up every single move of that market. And these building blocks fall into 3 main categories. They are the initial interest, or the noise, they are the follow-through, and exhaustion. So when it comes to managing your trades, right, we're talking about trade management here today. When it comes to trade management, we can't talk about managing the trade unless we know why the market's moving or the different phases that it goes through throughout the move. So by understanding how the market moves, we can then, of course, adjust or adapt our trade management style to capitalize on what the market has to offer. So we're not going to simply just pick the numbers out of the sky. We're not going to make up a system of managing our trades unless we know exactly what the market has to offer for us. Now, real quickly, guys, let's go over these 3 main phases, and then we'll show you guys what they look like and some of the things we look for. Now, phase number 1 is called the noise. It's in the blue all the way to the left. Now, this, of course, is going to be the first 1 to 3 ticks of the move, okay, called the noise, or the initial interest. This is where we start getting the initial buyers and sellers starting to pick away at that move. Right? Maybe we're looking for a jump to the upside. This is where those first 1, 2, 3 ticks, we start seeing a lot of noise, right? Buy stops and sell stops are being run. We have initial people jumping in early, trying to predict the move ahead of time. So a lot of noise goes on in the first couple ticks of any move, whether it be up or down, big move or small move. It all starts with the noise. The second phase is the follow-through. Now, this is where the majority of the market begins to see this move develop. They get tempted as well, and they decide to now jump in based upon this developing move. And then the third aspect is the exhaustion. So phase number 3 is when we start seeing exhaustion patterns on that move, and we begin to look for the move to come to an end. So as you can imagine, we look to get in early around the noise. We look to, of course, take profit, right, to capitalize on the move through the follow-through. And we then look to trail our stop, to use some very simple techniques, which we'll go over later on in this video series about how we actually use our methodology to do this, to, of course, identify exhaustion and get out of that trade to finish up the move. So let's take a look at how these 3 phases, right, the noise, you've got the follow-through, and the exhaustion. So what do these look like on your charts? Well, let's say, for example, we have the short-term trend is up. So we're looking for a long trade. Now let's say, for example, in this one, this is a breaker long setting up. So the breaker pattern is the pattern. It breaks above that red line, makes that swing high, marked in blue, then dips back down, and now is getting ready to jump above that swing high to hopefully get us into a profitable trade here. Now phase number one is initial interest and the noise. So here's where buyers begin to gain momentum. You'll begin to see the momentum indicator at the bottom start to flip up and curl up in support of your buy order here. This, of course, if you guys were short in the market right here, your buy stops, right, your protective stop, if you were short, would be triggering right about now as well. So buy stops get triggered as we break above that swing high. And of course, you've got all the rookies and what I call the predictors, right? The hope and prayers, the guys who are going to get in early and just simply hope and pray that this move continues. Okay, so of course the rookies will jump in early. All the predictors, right? They haven't seen anything yet, so they're predicting at this point. All the buy stops are getting triggered from all those sellers out there that are getting caught on the wrong side of the market. And of course, you've got the buyers begin to gain momentum. This, of course, is that initial interest, right? This is where we begin to see the first couple bubbling up here of the buy orders, and we start looking for the long trade. Now, the second phase is the follow-through. This is a very important phase because this is where we look to get in. The follow-through, what is that? That's the confirmation of the move. Now, what is follow-through? Well, follow-through is seen in increasing the tape, right? So the pace of the tape goes from yellow to green, starts increasing, so the speed of the tape starts increasing dramatically. We see large orders on the buy side flood the market, so our filter time and sales windows start showing nothing but buy, buy, buy. And of course, we start seeing price start to move dramatically. Traders then push this thing up. Remember, at this point in the game, the rest of the market now has already started to take notice that this level is being violated, which means the initial noise has already come and gone. Now, the mass majority of the buyers now are convinced this move is happening, and they are now jumping into the market, of course, pounding this thing to the buy side and propping this market back up. This is where the move begins to start to grow some legs, right? Begins to start running on us. We, of course, look to take our profit right about this time, half a percent off the table to make sure we grab a little bit of profit off the table. All right, in phase three is exhaustion. So, of course, as we watch the follow-through push this price up, right? Remember, guys, follow-through is where we actually see confirmation of the move. The buyers are all jumping in. Now, of course, on phase three, we have exhaustion. The buyers are now going to lose momentum. The pace of the tape slows. We start seeing the buyers start to take profit. So we begin to see overhead resistance, and most likely there will be a little bit of a pullback or potential a likely reversal. So again, one more time. Phase number one is the open interest, or so the initial interest and the noise. So the buyers begin to gain momentum. We see the noise, right? Those 1 to 2 ticks, the initial noise. Phase number two is follow-through, where the pace of the tape increases, we see large orders flood the market, and basically everybody now wakes up and says, wait a second, the price is moving up with conviction, let's join them, right? So we see the rest of the market jump on along with us. And then, of course, phase number three, this is exhaustion, where buyers lose momentum, they start taking profit, we see overhead resistance, and of course, whether it be a pullback or a reversal, the pace of the tape will slow down, momentum will begin to shift against us, and we begin to look to take our final profit. You've got three phases. Phase one is the noise, phase two is the follow-through, and phase three is the exhaustion. Keep an eye out for our next video in this 5-part series about the emotions that come in with your trade management. Now, guys, trust me, you don't want to miss our next video. Very important. There's a lot of emotions that go in along with your trade management. If you're not aware of them or how to get around them, definitely don't want to miss next video next time. So keep an eye out for the next video in this 5-part series. My name is Joseph James. Hope this first video, guys, helps. And of course, we're talking about trade management and the 3 phases of the move. Don't forget, guys, our live trade room opens every day, 7:45 a.m. Eastern Time. Don't miss a tick. We'll see you guys next time.